Hello, everyone, and thank you for joining the IR Update. Today with us, we have Ben Kohn, CEO of Playboy. Hello, Ben.
Hello, Amanda. Thanks for having me.
Thank you for joining. So, Ben, Playboy has repositioned around four strategic pillars of licensing, media and content, experiences, and hospitality. So, how does this asset-light framework differentiate the company from its historical operating model? And which pillar do you see the most significant near-term revenue driver?
Great. So our operating model is not dissimilar from an overall strategy perspective to our past operating model. Content is what drives everything about this brand, from brand relevancy to what it means to the consumer. We're very lucky that we have Playmates as one of the great brand ambassadors. What's different, though, is we're not operating the businesses ourselves like we used to. We're licensing them. And so we're doing that at an 80% margin versus something that was considerably lower when we were operating them. So a much smaller team, much more nimble, really partnering with people that have domain expertise in those areas. And we're driving very high margin licensing revenue off of that.
Okay. And Playboy reported Q4 2025 revenue of $34.9 million. So that's up 4% year over year. Net income of $33.6 million, reversing a net loss in Q4 2024, marking the company's fourth consecutive quarter of positive adjusted EBITDA. So what were the primary drivers behind the return to profitability, and how should investors think about the sustainability of the trend going forward?
Yeah, so we have done some transformative deals over the last 2 years to really change the business. One is our partnership with Byborg, where we outsource our license to them. Well, previous digital businesses that we operated ourselves. So we took a business that was doing approximately 21 million of revenue and about $2 million of EBITDA and turned it into a business now doing 20 million of revenue and $20 million of EBITDA. And then second, a recent transaction, outsourcing and licensing in a master license deal, our China business, to UTG, a former licensing partner of ours. Those have allowed us to substantially reduce our internal overhead, move to a very predictable revenue model moving forward. And so the profitability that we've been able to derive over the last 4 quarters should continue moving forward. It's a completely different business than it was a few years ago. We're an asset-light business today, really driving the majority of our revenue through high-margin licensing revenue. Moving forward, we have some really interesting growth opportunities in front of us. Our recent content business that we have launched, which drives every facet of our business. We are now driving new revenue streams off of that, from subscriptions, which we launched a few weeks ago, to paid voting and many more to come. And so the business is in a very healthy place, and we're excited for the future.
Perfect. Licensing revenue has become the company's most predictable revenue stream, with 90% of fiscal year 2025 licensing revenue supported by contractual guarantees. How is Playboy expanding its licensing footprint, and what are the terms of the $122 million UTG China joint venture, which closed just last month, mean for the long-term licensing cash flows?
Yeah, our licensing business is in a great place. We have $300 million plus of forward book licensing revenue. And we will continue to add to that as we grow categories and geographies. For the first time, we've actually consolidated from an operations perspective our content business with our licensing business. So content is the driver for brand relevancy and awareness around the world. We are going to make sure that what we do from a licensing side ties to content and vice versa. And so what you'll start to see is models that we shoot our Playmates wearing Playboy merchandise. But more importantly, the content that we're focused on will help grow our licensing business moving forward. And so, good examples of that, for example, might be Playboy Swim, where we're doing things about the world's sexiest beaches from a content perspective, featuring our phenomenal playmates, but we're using that to then launch a swimwear line moving forward. And so we're really excited about the future. There's a ton of white space and growth opportunities out there, and we're being very strategic in how we grow the business moving forward on a licensing basis. But look, 90% of it's in the form of MGs. We have 300 million of forward booked revenue. And so it's a very predictable revenue stream and cash flow stream for us moving forward.
Okay. Honey Birdette delivered Q4 2025 sales growth of 9% on strong gross margins. And the brand's new loyalty program has already reached approximately 80,000 members since its mid-October 2025 launch. So what is Playboy's strategy and how does it tie into the broader Playboy brand ecosystem?
Yeah, well, Honey Birdette is a phenomenal brand. We're actually teaming up with them. We'll be announcing that this week on a paid voting contest. So we are in the process of doing a Playboy collaboration with Honey Birdette. Honey Birdette's designed a capsule collection for Playboy, and we'll be searching for the face of that advertising campaign with a paid voting contest with Playboy and Honey Birdette. But our strategy moving forward for Honey Birdette is very similar to what we've been employing over the last 6 quarters. Really focus first and foremost on product. The product is great. It's resonating with consumers. And then we'll continue to expand our store footprint in the United States and our e-commerce presence globally. And so with that, we think we can continue to grow Honey Birdette moving forward, and we'll look for select opportunities to collaborate with them between Playboy and Honey Birdette moving forward.
Perfect. And as our last question for today, Playboy is relaunching its iconic membership club concept with a planned Miami Beach club. You mentioned that before. It's structured as the new flagship mansion, using third-party capital and a world-class hospitality operating partner to limit the company's capital outlay. So how does this hospitality initiative fit within Playboy's broader brand revitalization strategy, and what milestones should investors watch for in 2026?
Well, who doesn't want to experience Playboy, live, right? So the company has historically, over its years, had 40 plus clubs around the world. This is really the reimagination of that. We're lucky enough, as we're moving to Miami Beach, the corporate headquarters, to also have the opportunity to open a Playboy mansion in Miami Beach as a private members club with a public restaurant. So some of the great things that used to exist at the mansion, between the movie nights and game nights and other things, will be brought to a membership opportunity within Miami Beach. Playboy is such a unique brand, and there's only one other brand in the world that I can really think about that is similar, but for kids, and that's Disney, right? And so when you think about Disney and experiencing Disney live, taking that phenomenal IP they have, just like we have phenomenal IP, and bringing that to life, we plan on doing that in Miami Beach and then expanding that to other places around the world. And so, I think Playboy is best when consumers can experience it live. And this model that we have and the operating partner that we've picked, we're very excited about that future.
That's great. Ben, thank you so much for joining us today.
Thanks, Amanda. I appreciate it.